My name is Rebeca Guzman. I work at Chelsfield. We are a London-based investor, developer, and asset manager. We invest in key gateway cities in Europe, America, and Asia. And I am sort of responsible for our retail strategy globally.
Great. Christofer.
Yes, my name is Christofer Salmen. I work at something called Alecta. We manage pensions for 25% of the Swedish population. And I'm responsible for our direct investments into real estate, retail real estate, and also work with our indirect investments into retail real estate.
Okay, great. Herman.
Herman Kok, head of research at Meyer Bergman, based in London. Meyer Bergman company is an investment company established in 2004. That time we started as a shopping center investor with a strong focus on emerging markets. And in the years since we have EMEA in operation, we shifted our strategy to more like Western Europe, core cities, very much high street and urban mixed use, and more recently also last mile logistics.
Great, Eric.
Good evening, everyone. My name is Eric Decouvelaere. I work for CBRE Global Investors, where I'm in charge of the retail platform of CBRE Global Investors. Our retail platform is approximately 15 billion euro in 16 countries in Europe. And my job is to deliver good, strong performance to our investors, but maybe more importantly, to please our customers.
Great, thank you. Just let's start with you, Rebeca. In terms of, we're here at MAPIC. So looking at some of the I suppose, the key changes that you've seen between MAPIC last year and MAPIC this year, I suppose, what's your sense of the mood and what changes have you seen from an investment perspective?
I would probably say the pace of change in general is a theme. I think maybe last year people were still talking about the market being tough, but maybe things were going to get better. And I think perhaps the rest of the panel will agree. You know, we are in the midst of a structural change to our industry, and it's not going away, and it's only accelerating. So I would probably say just the pace of change.
Okay, good. And I'm going to give a reminder at the beginning, just so that we can deal with all, because normally everybody is incredibly polite. But we've all got microphones, so therefore, if we want to engage, do, absolutely. Let's also just, you mentioned there, Eric, in terms of getting it right for the customer. In terms of that consumer market, what are you watching, therefore, and what's influencing your strategy?
I don't think the customer is changing, but I think now the customer can speak. You know, preparing this panel we were discussing 5 minutes ago, and our industry has started first to do some B2B, let's find tenants. Then B2C, let's find customers to see those tenants. And today I think things have changed, and we should almost speak about C2B, and we should almost speak about C2C, because customers are speaking among themselves. So I think we have a very exciting challenge to really listen and build propositions which are relevant to all the customers we want to engage with.
And in terms of that, there's a lot of discussion around mixed use, especially here, and you can see that from the discussions that there've been here, but also the people who are here. You're obviously focused. I know Rebeca as well, but Herman, you're focused particularly on mixed use there at Meyer Bergman. Maybe just tell me from your perspective what that means, what you're aiming to do, and where you see that adding value in terms of the investment side.
Well, we obviously are very much interested in urban mixed use. Looking to our strategy a bit more specific, our approach is very much buy, fix, sell. So obviously our investment strategy is focused on having buying well-located, preferably under-managed properties on which some work is to be done. Fix it, redevelop, transform whatever is needed. When the property is optimized, matured, we sell it back to the market. So our horizon in that sense is, in a direct way, fairly limited. But talking about urban mixed use, obviously you're talking about a building but you're also talking about a block, you're talking about a neighborhood, you're talking about a piece of city, you're talking about something which is connected to a wider thing. And of course, traditionally talking shopping centers, you could easily say, hey, this is our area, this is the mall, this is the public space, that's the private space, different floors, that's how it works. As a building, you're a part of a neighborhood, and that neighborhood you want to function, you want to provide your services. So in that building, of course, it's about functions today, it's about functions tomorrow, it's about flexibility, it's about creating added value, it's about creating private space, places to work, places to live, where people feel home. At the same time, it's about basically places where people can connect, where people can play, shopping, F&B, social spaces. That's often the place in the building where people do encounter and where actually a neighborhood comes to life. If you walk through a city, if you walk through a neighborhood, it's often the retail, the cafes, the restaurants which define the color. And that in combination with the quality of the public realm, the connectivity, but also the quality of the public space. Is it convenient? Is it safe? So in other words, buying mixed use, and particularly urban mixed use, whatever functions are in there, however you are going to change it, you buy a piece of a neighborhood, you buy a piece of the city. So you buy also a piece of the context. So the responsibility is not only in the building, but it's crossing the doorstep into the public space. There are many more things, but I think that more or less, is a point for us.
Okay, good. And Christofer, obviously, although Alecta as a fund obviously has exposure to other markets, let's look a little bit more about the Nordics, because I think it's interesting just to pick up on what's happening there. You've obviously got a different climate in some ways to other parts of Europe. So I suppose, what are the key trends that you're seeing there? Are they changing as well?
I'll say one perspective that we definitely bring with us, and we see as aware, is a shift in focus from actually looking at people as consumers and truly looking at people as humans. And there's something I think all of us have heard here quite a lot. That's a word that's authentic. And authentic is quite vague for many people, but we think that being authentic is actually listen into who people truly are and the dreams and the thoughts of people. So we hear, for example, the C2C focus, truly, really building culture and listening into one another, because we don't believe that we know what people think. We want to listen into what people think, and we want to buy into and invest in places where people are, and it's interesting to be just because they are themselves.
I mean, it's interesting, that whole point about authentic, because I was also doing chairing a panel at the ICSC Innovation and Trends Conference, and that had Mercado Metropolitano, but the discussion there was all around that fact that a lot of the customers that they'd got, if you weren't authentic, they would know immediately. And that included for them authenticity of brands, both in terms of what the product was, how it was created, but also your sustainability, carbon footprint, all of those things. And the people who were their customers would actually be looking all of that up. And if you were wrong on any of those, then that store would just disappear. And so their role was to make sure that everything there was authentic. And that creates another challenge, really, in a way, for all of you, because if that's the way that millennials are moving or generational move is happening, you've got different types of shoppers coming into and looking both for food and drink, for different experiences, for different products. How difficult is that then as a challenge to create retail for them? I mean, anybody can pick that up, but I'll pick on you first, Rebeca.
Yeah. I think actually, to Herman's point earlier, this whole ecosystem in which our mixed-use schemes exist in means that the role of us as landlords, for want of a better phrase, has changed a lot, and people expect us to engage with our partners, which is a word that Eric used earlier on before we came on stage. And I think that's probably the main challenge for us, is to understand that we are part of a much bigger community that is trying to deliver memorable experiences to the consumer. So in order to do that, we need to step away from this idea of thinking we are just landlords collecting rent, and we need to step up and think, how can we really work together? And I think that's the challenge. I don't know if you guys would agree.
Most definitely, and for example, in our big shopping center in Jönköping, in the center of Sweden, we're now launching a program where we, together with our management team and tenants and 40 people actually, humans working and interacting there, to train them in human interaction and train them to listen to people, because if we actually want to be a place, a marketplace, so to say, for human interaction and creation, we need to meet people in that sense. And we need to be the best of the best in that sense in every touch point. Because as a physical location, we're a brand where every touch point counts.
And I mean, maybe just with you, Eric, I mean, we've got various different, when you look across Europe, and obviously you've got a broad portfolio. When you look across Europe, you've got, high growth in some countries, static growth in others. How do you deal with that challenge as an investor as well? And is it all to do with existing spending power, or are there other things in terms of asset management, in terms of working harder to make this, retail work?
Yeah. Well, our secret sauce, it's a secret. Our secret sauce is first, like all of us, to be very selective when investing. And to be selective when investing, we look, obviously, to the macroeconomic fundamentals. But at the end of the day, we are just a small part of the pie. So it's important to look at macroeconomy, but we need to look at really to have a micro approach of any single asset we are looking. This is for the investment stage. For the management stage, what to say? I read this week something which I thought, it's fascinating. One of our colleagues in this industry said we are no more asset managers, we are value managers. And I find it really, really interesting, because if we are just managing asset, we are not proactive. We are not listening, to your point. We are not answering to what we have understood. And this is what makes the difference. So I believe the secret is to be very clear on who we want to engage with, what customers, one. Two, to have a very robust plan to deliver this. And last but not least, as usual, execution. And I think this is very recent in our industry, in a way. Sorry to be maybe a little controversial, but we need to work more.
We definitely are allowed to be controversial, that's fine. I mean, that's an interesting point, because before, obviously, when you were a large-scale retail landlord, and I remember having these discussions 5 or 6 years ago with the increase of e-commerce, and saying, but shouldn't you really be helping the retailers deal with this as a shopping centre owner? Because ultimately, if something goes wrong with them, you're going to be without a tenant. But the view was very different then, which was, oh no, well, I'm sure that will be fine. But this is now are we now in a position where the world is much more challenging, and actually everybody has got to work much harder on those assets to position them correctly, to make them more attractive, to really work on them?
Yeah, I mean, looking also to our acquisition and efforts, I mean, we are if you look to the retail landscape and the whole online impact, the way to help retailers. Of course, that's always a very tricky question. You have cyclical changes, shock changes, where, help is needed, you can intervene. There are also structural changes. And if you look to the cycle of retail, the wheel of retail, formats appear, formats mature, formats also decay. I mean, we can see that happening in many segments of the market. And that has to happen. I mean, and you are part of that. As an investor, as a landlord, you have to try to adapt, you have to try to support, and particularly you have to prepare your property for a new future. And that can be retail-based, simply new tenants, new format. It can also be a real functional change. Maybe the building is not there for retail anymore. Maybe it's a workplace, maybe it's a place to live, maybe it's a food hall, whatever. And as an investor, you have, let's say, to anticipate and to accelerate that change. When we look in our acquisition strategy also very much, of course, we look to macroeconomic figures. We want to have a certain level of growth in the market. We want to have a certain level of transparency. I mean, simply otherwise we don't go there. But we look very much to cities. We think very much our starting point is thinking about cities. Which cities do grow? Where are their dynamics? Where are the demographic dynamics? Where are the economic dynamics? Where is the knowledge? Where is the creativity? Within those cities, we look very much two types of locations: core locations, prime high street locations. Of course, in those locations, value add. Where do we expect change? Where can we improve? Obviously, a lot of us are looking in there, so it's a very difficult game. We're also looking to areas, where is there change? Where is gentrification? Where do neighborhoods upcoming? Where is there a transformation of, let's say, industrial warehouse function into residential areas, central urban areas, where retail is needed, where there is a mixed-use environment, where walkable urban concepts are being generated, and being part of that. And again, you know, it's about re-establishing communities in core cities, but in those gentrifying areas, it's often even being part of creating new communities and trying to improve the overall quality of the area.
I mean, this topic as well around community comes up time and time again in these debates. I mean, it's been fascinating for me doing a series of events around investment, but also on a number of these topics where in almost every topic this year, ESG, wellness, sustainability, community, those things have come up, whereas and impact investing have come up, which didn't really come up at all, almost at all, except for this year, interestingly. Whereas we might talk about finance. I'll be surprised, I've put a question in on finance, but I'm pretty certain now that we won't get to it. But, I mean, that's interesting, that creating communities, also the idea of if you're working with cities, placemaking, creating something that's not just this is a 5-year fund buy and then we're going to redevelop it and sell it on, but actually something that's a more sustainable investment, both in terms of sustainability, but also of the investment itself. And has an investment now got to have all of those criteria for you?
From my point of view, I would say maybe it doesn't need to, but I think we are acutely aware of sustainability on both sides of the fence, as you suggested. And I do think we talk a lot, actually, internally about this idea of impact investing just being investing now. And I think, back to Herman's point, we have a responsibility as landowners, investors, developers, asset managers. So it's not so much impact investing, it's just this idea that whatever you are buying, you're buying a piece of something much bigger. And you need to be aware that the planners, local government, will have a plan for that neighborhood. Central government might be involved because a lot of us invest in big cities with big infrastructure projects. So I think really what I'm trying to say is we all have this responsibility, and that's something that is not going to go away. And
I mean, one of the things that we've talked about a lot in terms of place. The Nordics often perceived as somewhere that's leading a lot of these trends, both on sustainability, but community, coziness, for example. Are there new trends that you're seeing that I suppose are coming also from what you want to achieve and is going to be future-proof also for the customers coming into the shopping centres?
I would say, as probably you all know, sustainability is on a very high level on all our minds, and in the Nordics definitely. And it's truly something that all brands try to bring forward. But by doing that, you promise something, and that promise is actually something that you have to deliver over and over again, and you have to find proof for it. So I think sustainability, but also challenging the thoughts of what, how much, and in different way you consume. Some believes that we will question how much we consume, or in which way we consume, or even if we consume at all. So we think we have to listen into and be aware of every possibility.
And you mentioned brands there, which is quite interesting, because if we're looking at other topics like student housing or different things like that, co-living, and also to a certain extent, of course, co-working, everybody's trying to build brands where exactly what you're saying there is there's a reliability of that, rather like going to a hotel. I'll mention some brands, but there are others. Obviously, you know what to expect if you go to a Hilton, or you go to a Marriott, or you go to a Citizen M, or... is that something that, therefore, this is something that's, if we're about customer experience, is that something that the industry is going to have to recognize and do something about, which is that, therefore, shopping centres will be a brand that has a consistent presence and a consistent offering?
Oh, absolutely. I think that's essential. I mean, when you look to retail, but specifically, but also property more general, we have to excel in whatever can not be delivered online. So basically, the experience, the service, hospitality. And when we look at the consumer, when we look at the customer, what do we see happening? I mean, of course, we all, through social media, we all have more experience. We want to have more experience. We want to have better quality. We are all busy. We have less time. So we want to be surprised on the one hand. We want it to be predictable on the other hand. We want to guarantee success because you don't want to waste time. And of course, with the world turning faster and faster, we want everything immediately. So in the real estate, it happens the same. At the same time, we see basically the economy shifting from, let's say, an economy based on possession and renting. We see the economy shifting towards, let's say, membership, right to use, hospitality, hospitalization of real estate. So student living, co-living, but also retail, pop-up formats. I think the whole market in that sense is shifting to a context where basically people can experience it. They got a kind of membership, they got a kind of right to use it. And in that sense, of course, as real estate, you have to be able to accommodate that. It's more and more about service. It's more and more about hospitality. Of course, we provide quality places, but we provide a complete context around it.
Okay, good. And I could see that, Eric, you were about to answer that before Herman did, so...
Well, if we're trying to rewind our discussion, we were speaking about location. Everything's, this is our business, location, location, location. Location is no more sufficient. What we need to have is footfall, footfall, footfall. To have footfall, you need to be clear on who do you want to target. You need then to deliver your proposition and execute it superbly. And this part of the superb execution means you need to listen and you need to walk the talk. You need to walk the talk in the delivery. You need to walk the talk in sustainability. You need to walk the talk in what you stand for. And the what you stand for is, at the end, the branding. What do I relate when I have a shopping mall in a city in Italy? What does it stand for the people in this city of Italy? And I think this is where we have to do a lot of work, because at the end of the day, we are moving from an economy, a model. Our model was very much offer-driven, and now it's demand-driven. To be good in a model which is demand-driven, you start listening.
That's interesting. I mean, one other thing that I want to pick up, just to drill down a little bit into, we had a discussion this morning which was around retail trends. And one of the things that came up in that was the growing number of things and actually the broadening audience here at MAPIC, but also the things that now came under retail, which were food markets, which was F&B, so cafes, restaurants, bars, dark kitchens, cinemas, all kinds of things that are now coming under that retail banner. And I just wondered how you see that. Is that really retail, or is that actually, should we embrace all of that as retail investors?
If I may, if I may again, for all of us in the room, whatever we are, landlord, investors, brand, what's our job at the end of the day? Our job is to buy time and to sell pleasure. It's very nice, it's fluffy, it's dandy, but it's really, we buy time and we sell pleasure. Then each of us has a different role, but this is what's important, I believe.
I'm writing down buy time and sell pleasure because it's something that I need to change in my life. I think that's a good thing. Good.
Can I join?
I did meet somebody today as well whose job was as a leisure consultant, and I thought that was a rather lovely thing to be. Good. Retail also covers quite a wide variety of different types of asset as well, if we want to look at it on an asset basis. You've got high street, you've got shopping centres, you've got food-anchored shopping centres, mixed-use new development areas. You've also got the outlet markets. How do you see those? How do you see those performing against one another? Where do we think the sort of opportunities are when you look across those areas, and how are they performing?
We do almost all those class of assets except outlet and travel shopping. I was formerly working in outlet shopping, so it's very. First of all, there is obviously the population, the density of population. This is a given. But even in less dense population, you can still find scheme which will be relevant. Once again, here, when we distinguish the class of asset, we look at ourselves as a business. We don't look at the consumer. And I'm astounded and amazed about this MAPIC is about mixed use. All of us, we speak about mixed use. But we were discussing this earlier. I don't know if one of my colleagues wants to take it. But are we reinventing the wheel? Because mixed use is basically what everybody wanted to live 40 years ago, before we decided that humans need to live in this place, work in that place, and buy in the third place. Mixed use is just common sense, I believe, when you look at humans. Sorry.
I mean, shopping centers, high streets, outlet centers, retail parks, it can all work. But the way, I would say we look at the market, I would say you either have to be convenience, proximity. People go there, daily needs, very easy, very from the workplace, from the place where you live. Often an urban mixed-use context can work very well. Or you have to be, a destination. You go for the experience. You go for comparison shopping. And I think it's a very, delicate, because what is destination, what is convenience, you have to be relevant. And that really can differ from location to location to location. There is not a standard definition for that. But you need to have the real vibe. The real dynamics have to be there. And the problem, I think, is increasingly, when that's not there, there is often trouble.
If I may, sorry. I'm always scared when we start opposing convenience and experience, because I believe, and so I don't play on words, but it's not because it's convenient that it needs to be really boring.
Oh no, absolutely
not. And we have to be very careful, because I think experience needs to be convenient. And a convenience, even buying your Saturday morning food needs to be an experience.
True.
If you have not an experience,
True.
Why do I go to this place? Why
True.
do I give time to those people?
True, but you often go to that place because it's easy. It's nearby.
Yeah.
It doesn't cost you time. It is easy. Whereas for the experience, you can go to the nearby regional town, but you can actually also take an EasyJet flight or whatever. You fly to Paris. Mm. So, but you go to a place which, in your perception, is relevant.
Just when you're looking at the retailers, what are we seeing? Are we seeing new types of retailer coming in? What are you seeing in terms of that side of things? And this is for anybody. So,
I think this is the most exciting time to be in retail right now, because occupiers are blurring the lines of what retail is supposed to look like. And there's a brilliant operator brand, I should say, in the US called Camp. And they're about effectively selling experiences to kids. And what they do is they do a sort of traditional store at the front of their space, and at the back every couple of weeks it changes. And one day it might be Space Jam themed, and the other day it might be a Thanksgiving theme. But essentially what they're doing is they're selling experiences to kids. How do you classify that today under planning law? It's probably a sui generis. Is it a retail store? Is it not a retail store? And I think brands that are pushing those boundaries make me personally very excited. And I think that there's so much out there, particularly we were talking before we came to the room about online brands coming, doing IRL stores in real life and how they approach things and how they effectively leverage the data that they've got online to then engage with the consumer, I think is really interesting.
And you've got, here we've got a whole section which is just on leisure. And again, that could be leisure as a form of creating an attractive destination, but also potentially also as a sort of retailer, if you like, coming in as an occupier within a shopping centre. I also want to just pick up, because obviously there's a lot of negative sentiment, particularly from investment. There's a lot of people who I talk to who are out of the market, who are just saying, well, why should I take that risk at the moment? We're seeing e-commerce coming in, and therefore we see there's a large shift away from retail, so I'm therefore going to invest in logistics, because I know that that's a safe bet at the moment. And at the same time, there are very plainly challenges if you look at the UK market. I want to pick up on those challenges, see how you see them as investors, and how you build that into your model, because you are all still investing. So how do you see those challenges? You're having to deal with the whole issue, Herman, in the UK as well, with where we've got taxation, we've got different forms coming in that make it very difficult for some retailers.
Well, what you of course see when you look to the retail, obviously the disruption is ongoing. That's very clear. And just a side remark, what the main difference I see between last year and this year. Last year everybody was talking about disruption. I think this year we started to talk about transformation, and I think that's very good news. We start to think in terms of solutions rather than in terms of problems. But looking to the retail, and of course the UK in that sense is quite an explicit market, also because of the Brexit uncertainty. It's in the limelight quite a bit. But when we look at the UK particularly, of course, one thing we have to realize in the retail sector, it's not only about online. It's not only about retail shifting to multi-channel. There are more problems. You referred to the taxes, the business taxes on many locations, whether it's in the periphery, whether it's in London, it doesn't matter. There is an issue for retailers, the taxes influencing their business. And of course, in the good days, probably that wouldn't have been too much of an issue. But coming together with online, coming together with an aging society, coming together also with rising income inequalities, affecting the middle class and affecting the consumption patterns of people, all those mechanisms come together and of course influence the retail landscape. So in that sense, looking to the UK particularly, but we also see it in continental Europe, we also see it in elsewhere in Western Europe. In that sense, of course, the shakeout of retail is probably going to continue for a while. And when we look at the retail investment per se, and when we look at retailers, basically we see a need on the one hand for better stores, but probably going in combination with the need also for less stores. So we will see locations changing in terms of profile.
I heard your deep analysis, and most of all about the interesting market, challenging market. How are you dealing with this? But I still look at the title of this panel. I'm sorry, and I will be direct. Guys, what are the opportunities?
Okay, first, like all of us, that capital markets are not liquid at the moment, to say the least. So the first opportunity is basic common sense, work with what we have, work with our portfolio, and try to apply all the nice things we have been discussing over the last 30 minutes. I think it's the first one. The second one, market will become liquid again. And at this time, we need to be very, very discerning. Very discerning, looking obviously at the basics, the macro, the micro, being much more, I believe, granular when it comes to competition analysis, when it comes to catchment analysis, when it comes to customer perception of a given scheme. I speak about existing schemes, and this is what will make it magic. And I see you smiling. Please feel free to disagree. But at the end of the day, what's our business? Our business is a project-by-project approach. Each project needs to be relevant. And in fairness, have we done this job over the last 20 years?
Robert McLean, CIJ Europe. These new types of retail, it's all very interesting, very exciting, as you say. They're untried formulas. These are completely new sorts of formats. I'm interested if, as investors, I'm sure you're very excited by them, but do you expect to pay a discount for them, or do you pay a premium for them? We haven't had a recession in 10 years now. People behave as if recessions are a thing of the past. They're not, and you're buying properties that have types of retail that simply are untested in the tougher times. How do you go about valuing them, and do you expect to pay more or less than that? How do you deal with the valuations, and are you sure that when it's time to sell these things on, that other investors are going to have the same enthusiasm for new types of retail that you do?
Once again, I'm sorry to disappoint you. I would like, who in this MAPIC would like to have the answer to this? But I think the answer goes back to a micro approach. A micro approach. I don't think the one-size-fits-all, by type of asset, I don't think it works. So what does it mean for us? I think we have a lot of work to do to better understand what's happening. This evolution, I think our approach is quite fragmented. Because a few years ago it was, oh my God, everything will be sold online. And today, omnichannel is a given for everyone in the room. But we just see, when we speak about omnichannel, we just see the part you see of an iceberg. Because what's happening with omnichannel is for the first time, since a long time, since mom and pop shop, the customer can really speak and engage on the proposition, because you have the customer is leaving data, the retailer are exploiting those data and adapting the proposition according to those data. And I'm sorry, I don't answer your question. I see, because I don't know. One thing I'm sure of is that intensive and smart management will pay off, and that there is way too much emotion in our business at the moment. Way too much emotion. I think we need to really take time to look at the fact, whatever they are, macro or micro, and to really calm down, and as the market will become liquid, there will be opportunities. This I'm convinced of. Because people will continue to shop, they will continue to drink, they will continue to have fun.
Picking up that point, which is where should people invest? What should they be looking at? Whether it's a new opportunity in retail, but where should people be looking to invest in retail? Let's start with you, Rebeca.
Look, we invest in key gateway cities only. So I understand that we're already privileged in that sense, because we will not be looking at, tertiary cities. But I will say we will continue to invest in great places, and we believe in repurposing. I think that's the magic word for us. And perhaps to answer some of the second question, we will never look at things at a discount, but I do think you need to start to look at retail differently. And if retail doesn't work, to Herman's point before, let's not be afraid to say maybe it's a great office, maybe it's a great retail residential scheme, maybe it's a distribution center, maybe it's last mile delivery.
Okay, good. Christofer.
I would say we invest in places. We invest in places where people are, and we invest with great management.
Okay, Herman.
Of course, also linked to the genes in our company. We like buildings and places where we can make an adaptation, improvement exercise to make those buildings places for a new future.
Okay, good. And finally, Eric.
No surprise, we need to invest in highly densely populated zones, and we need to deliver something relevant for those humans.
Thank you for allowing us to buy your time. Thank you.
Richard. Appreciate it.